two other sessions to get through before we complete the afternoon, the plenary, the recognition ceremony, then we have the breakout sessions. So for those who've just come in, we ask that you please take your seats and we will commence. This next final plenary session for today's program looks to present a holistic view of the AFI network, of the current state of women's financial inclusion, and the positive work being done to close the financial inclusion gender gap. Ladies and gentlemen, to give us a deeper perspective around this thematic area, we have two presenters to get things started for this plenary session. The first I'd like to invite, please put your hands together to welcome from the World Bank, the economist Saniya Ansar.
Good afternoon, everyone. Post-lunch sessions are hard. Everyone wants a siesta, not numbers. But nevertheless, it's a pleasure to join you here today. I had some very interesting conversations with members of the AFI over the last few days and was able to use some of those discussions to highlight some themes in my presentation today. To give you a quick background on what the Findex is, I'm sure most of you here know what it is, but it's a demand-side survey. We collect data on access to and use of financial services. And we've been doing this for the past 10 years. We do it every 3 years. So now we have about 4 discrete years of data for more than 140 countries around the world. So we're really able to discern some trends, some timelines, and to see what the demographic gaps look like, and to help and use this data to help build policies. So the good news is, and I'll really, I think, in this presentation, focus less on the numbers and more on the stories and the trends, because I think no one wants to see the numbers or remember them. But overall, we know that 76% of the adults globally have an account. This is 71% in developing economies. The real exciting news is that after years of not changing at all, we've finally been able to sort of reduce the gender gap from 9 percentage points to 6 percentage points. But it comes with caveats, because if you look at some of the country distribution, not each country has been able to sort of harness that reduction in the gender gap. So there are some countries, for example, let's say we have Uganda, which was really able to capitalize on mobile money and was able to reduce the gender gap to 0 by increasing mobile money accounts for women. We also have Turkey and Peru, who didn't reduce the gender gap significantly, but also saw women getting more accounts than men, which helped increase account ownership in these countries. But on the other side, we have other countries such as Tanzania, Cote d'Ivoire. Cote d'Ivoire was a great example in 2017, where mobile money reduced the gender gap for women. But this time, the account ownership in these countries increased, but only increased for men, which, you know, sometimes I think for how countries transition, the policies for women really matter in this process. And we see this really in sub-Saharan Africa because the use of mobile money has been instrumental for some of the young adults. So if you look at young adults under the ages of 35 who are using mobile money, there is no gender gap. But as you look at adults with financial institution accounts, within the same demographic group, you actually start to see the gender gap, and it grows as they grow older. We also know that account ownership is not the end, but we want people to use their account because it's not just important for them to use digital payments, savings, and credit, but it's also a huge convenience for a lot of adults who don't have physical access to traditional banking accounts. And we see that there's been a growth in digital payments as well, but there's a gender gap, and the gender gap has not changed over the last decade. We also see that it has less of a relationship with overall account ownership. So for, let's say, in a country like Pakistan, which has a really high gender gap in overall account ownership, for digital payments, this gap is actually insignificant, which means that of the account holders, men and women were equally likely to use them. But then we have other examples too. India and Sri Lanka, with zero gender gap in ownership, actually have a significant gender gap in use. And one of the big reasons for this is just account inactivity. People have accounts but don't use them. And even with this, we see women are more likely than men to have inactive accounts and to not use their accounts. And why does this happen? So a big critique usually around digitizing government payments or digitizing wage payments has been that people receive payments into their accounts but don't store them in the account, but withdraw them immediately, and so the accounts just turn into one-time use accounts. But we explore this data, and we see what people are doing with these kind of payments. So on the left here, you'll see the inflow of the money, and it comes in different ways. So it could be through a government payment, a wage payment, even remittances from a family member in another part of the country. And we see that overall, a third of women are receiving these kinds of payments. And what are they using them for? Because we actually see women are using them for a variety of things. The biggest one is just using it for make digital payments. And this could be payments in a store or online payment or sending money to someone in your family. We also see that women are borrowing and saving formally more often. And that makes up more than a third of these recipients. But the most interesting one for me here is that women are actually storing money in their account as well. And 60% of women are saying this. And what storing means is that they're just putting the money in the account and maybe holding on to it until they can make a utility bill payment next month or pay for school fees next month. And what this highlights is that there's this big opportunity for short-term saving products because these are essentially short-term savings. They're holding on to this money and using it as a savings account. We do have some robustness checks to see if this actually works. And one of the questions we ask is if people ever open their first account to receive these kind of payments. And we find that 37% of women, of all the women globally, open their first account to receive a government payment or a wage payment. So there is actual evidence that these kind of payments can sort of signal or give the first entry point towards use. We also asked men and women if they changed their payment patterns during COVID. And if COVID or the physical distancing or the limitations to like movement allowed them to make more payments digitally than in cash. And we find that overall, women were less likely to make such payments, but among those who were making these payments, there was no gender gap, which highlights that if allowed the opportunity, women and men were equally likely to use these kind of services for the first time. I'll quickly dive into one case study of use, which we saw in the previous slide. And women save in different kinds of ways. One of the most popular one is, I guess, through a savings club. I think a lot of women just use savings club through family, through friends. They're called different things in different countries. Women also save under the mattress to hide it from family members or in a tin jar on top of the kitchen shelf. And these kind of savings are low denomination, high frequency. And traditional bank accounts don't allow for these kind of saving patterns. Where an opportunity exists is mobile money. So we surveyed this for the first time. And if you see the dark blue bar here, you can actually see the women in some of these countries, mostly in sub-Saharan Africa, who are using mobile money to sort of capitalize on these kind of savings and to find a formal and safe and convenient way to save. And what this suggests is that mobile money, while it initially may have been an opportunity for person-to-person payments, actually also has the appetite for some kind of other saving products and different kinds of financial products that women could use. But all of this brings us to the leftover category. We know around 740 million women around the world are unbanked. And some of the main reasons, which you can see in this figure here, that the report are that the cost of opening or maintaining an account is too expensive, the distance to financial institutions is too much, and often those are addressed through mobile banking and agents. But there's also another reason that women quote quite often, which is someone in the family already has an account, therefore they don't really need one. And there's so much research that points towards the importance of having and giving the women the agency over their account because it leads to better health outcome for their children, better education outcomes. But what we see here is that 30% of women are still reporting this reason. In some countries, such as Turkey, this is actually as high as 40%. In India, it's even higher. And this is, I guess, one of the barriers that we found which can be addressed through the right kind of products. So it's not about just traditional banking, but targeting the right kind of products to women that would enable them to understand that they actually need an account too. Another challenge that we see among the unbanked women is around financial capability and confidence. So often we're unable to, even when we're using our own mobile banking apps, we struggle with them. And we struggle with certain payment instructions and making payments internationally. But among the unbanked women, almost 70% said that if they even got an account, they would not be able to use it, which really highlights the financial understanding among this leftover category of what could really be done with a financial account, even if they get one. We also see that among the banked, almost a third of women with mobile money accounts said that they would not be able to use it without a family member or an agent, and really points towards the importance of building financial literacy programs, but also allowing women to understand how to use financial products and to save themselves and to be less vulnerable from financial abuse or financial fraud. And I would like to end my presentation with this final slide, and this is actually a question from one of our panelists here as well, is that what would make women more financially resilient and what would protect them from the income shocks resulting from inflation, from natural disasters, and other financial issues that are facing the women today? And so we asked people, how would you come up with emergency funds and what would be your source? And so if you see the bottom left of the slide here, 34% of women said that they would rely on family. So when we were serving in the field, we asked them, who would you go to? And she said, my sister. And then we asked them, would it be difficult? And she said, yes, but her husband would never let her send the money. And often we see that this is the case for family and friends. So it's the most common resource for women, but it's also the hardest. So if you see the red bar here, almost half of them said that even though that's a source, it would be very difficult to use that in case of a real emergency. What's more reliable has been shown through data is savings. And in savings, you see that 18% of women say that that would be their source of emergency money, and almost all of them said that it would be easy to tap into that source. And with this, what this points to, that designing the right kind of savings products, providing easy access to borrowing, insurance products, can help women become more financially resilient, more resilient to financial and income shocks in times of an emergency. And with this, I'd like to end my presentation. I think we have an exciting panel next. Thank you.